Straight to the emails now, David Mtunzi. Please ask David if he thinks you would realize a difference between local equities with offshore exposure or a portfolio held in Forex, given the current exchange rates. Now, this is exactly what you were talking about before the break. And you're saying we should start looking at that now.
Very interesting thing, because if we look at the JSE at the moment, and let's take the top 40 shares, because I think if you look at the top 20 shares, that probably makes up 80% of the value of the JSE. Right. In fact, it's only in 20 shares. So if we go up, starting with something like Billiton. Billiton is a resource company. Most of its operations are outside of South Africa.
Okay. British
American Tobacco sells cigarettes.
Same thing.
Outside South Africa. SAB Miller, Anglo-American, Naspers, we can keep Richemont, luxury goods company. So the vast bulk of our market earns its money offshore.
Okay.
I on the back of a matchbox, I calculated something like 70% of the value of the JSE is actually earned outside of MTN, another one. Right. We can keep going. Naspers, even Bidvest, which is a company which is slowly embarking on ventures overseas. I think 50% of its revenue is from food services outside of South Africa.
Okay.
So it gives you an idea. You can, by investing in South Africa, actually benefit from growth in developing markets. A lot of the business is done in developing markets. Right. So that's one aspect. The other aspect of it is that if you do take your money offshore, for example, why buy Richemont? You might be able to now buy a similar company, LVMH, which is also a very good luxury company. If you don't like Anglo-American, you can buy Rio Tinto, which is the second biggest diversified miner, or even Vale, which is the up-and-coming Brazilian diversified miner. So you can actually expand. In other words, you get a lot more shoulder room if you go offshore without losing the quality of company, in fact, improving the quality of company. So you can extend your South African portfolio offshore. It's not a rand story.
Has anyone done the numbers on this?
Well,
run the numbers, saying for R1 that you've got here, you can get R1.50 there.
It's not
possible.
It's what is possible at the moment is a lot of our companies have run very hard, so you can actually get better value outside, and you get more choice outside. So it's hard to bring it down to real numbers. I don't like to call the rand, because in any case, you're calling the rand. In other words. With your top 40 shares, it doesn't matter. They are earning money offshore. So it's not a matter of saying, listen, I'm being disloyal or I don't like the rand. It's a matter of saying, hold on a sec, I want to extend my portfolio to the world's best companies. And what's the theme? What's the best theme that you can play is to get quality companies like ours, and we've got very good quality companies that are now doing business in China, in India, in Brazil, in Russia, and so on. So, Jeremy, something that will be, that you will know, something like Yum. You can't buy Yum brands here. What is Yum brands? KFC. That's their top brand. Yum is opening 20,000 stores in China. Now, hold on a sec. They love China. There's a lot of chickens.
Yeah.
So those are the kind of things. I'm saying, hold on. So this is very attractive. Or a company like Nestle, which is expanding rapidly into emerging markets, through their food products and that. So that's the kind of attitude that South Africans now have to start to adopt. And the Forex or Reserve Bank or Minister of Finance has now given us the tools in which we can do that.
Okay, well then give us a guideline here. Let's say I have R1 invested on the JSE. How much should I be looking at investing as a proportion of that as an offshore portfolio?
Personally, I'm doing 50-50. I'm doing one for one.
So
that's
I should be taking R1 and putting it into an offshore portfolio as well.
Mainly because of the quality of the shares that we're getting. In other words, we can double, instead of only being invested in 20 odd shares here.
Yeah.
I'm saying, okay, I've got my 20 here. Let me get another 20 offshore of equal quality.
Okay, so it's worth looking for an offshore version of the Satrix 40, for example.
Absolutely right.
Okay, well there you've got a number now. R1 on the JSE, R1 offshore, courtesy of David Shapiro. We'll get hold of him next year again and lash him if anything's gone wrong on that note. Let's go on to another topic now, David. Looking as an overview for this year, interest rates in South Africa. What do you reckon?
Stay low. I don't think that the economy has got sufficient energy or momentum for us to start increasing it now. Inflation is still under control. I think it will remain within the band which the government has suggested. So I don't think there's going to be any upward pressure there. And I think the rand will remain reasonably strong to keep a lid on the two things that could throw us out. Number one, oil. The oil price has been creeping up, but the rand strength has kept that low. And the other is food. And food inflation is going to be a big issue. Forget about the floods in Australia or forget about weather issues. I think what is happening is that as we start to see the global, we start to see China expand, India expand, all these emerging markets expand, it's going to increase the demand for food because people are no longer producing their own rice. They're now working in factories. They don't want rice. They want a Kentucky Fried Chicken, or they want a burger or something like that. So, or they don't want to drink water. They want to drink beer. So as the demand for food increases, so you're going to have increased production, and that means increasing arable land and so on. So we see prices of food starting to pick up as well, which could also be one of the wild cards from an inflation point of view. But again, the rand is keeping that down. So I don't see too many changes in inflation this year, and I think for the meantime, I think interest rates will remain pretty flat. I don't think we're going to see a reduction, but it will remain probably flat for another year. That's bad for savers, though. If you're a saver, it's bad. If you're a borrower, it's great.
We've said it so many times. The people that I feel desperately sorry for are the pensioners who grew up in a saving culture. And,
exactly right.
And now they're losing.
2 years ago, interest rates your call rate was maybe 10 or 12%. It's now down to 5%. Yeah. So effectively, their savings have halved because they're getting half the return that they do. They're the people, they are suffering, and it's hurting them a lot.
I would imagine then if you're looking at interest rates staying fairly stable and fairly low for the remainder of this year, that the property market is not going to do a heck of a lot this year. That's going to rumble along.
No, I don't see property, I think they'll stabilize. I don't think they'll fall. I think at the top end of the market, it's still a battle. If you've got the 10 million house or the 15 million house, I think you're struggling to sell it.
What is in property terms, what is the top end of the market?
I would say anything over a couple of million. I would say anything 3-5 million. I think that's the top end.
Right.
I think below that there's always going to be a demand, and I think those prices remain steady. But I think that, and I think there's still a lot of excess property on that market. We know that from these golfing estates, a lot of these houses have not been sold. Yeah. So that's a battle, and that's also a battle for the bank because you've got a lot of rich clients now that are pressurized, developers that have created those projects and who are under quite a bit of pressure. But I think by and large, house prices will remain pretty static. Jeremy, it's always a worry because you want them to go up. Why? Because you don't want the opposite psychosis of inflation, which is deflation. What is deflation? People expect prices to fall so they don't buy.
Right. Yeah.
That's a worry about deflation, and that's one of the big worries that they had in the United States. When people expect prices to keep falling, they hold back on the spending.
Yeah. Good news out though. Last Friday, that PricewaterhouseCoopers report saying that between now and 2050, South Africa will be number 7 globally in terms of real average annual growth. Fantastic news. What is real average annual growth?
Real annual average growth is taking what your nominal growth is, less inflation. So you take away the inflation. So let's say the economy grows at 10% and inflation is 6. So your real growth is 4%. Now, growth, when we mention growth numbers, you'll always hear, GDP growth is 3% or GDP growth is 7 or 8%, as we do all the time. That is real growth. That's after inflation.
Okay.
So what they're saying is that either means that inflation is going to be very high here, or alternatively, we're going to grow very high. I'm a bit concerned about those numbers.
You don't agree with those numbers?
I can't see that. I think that there's going to be a lot more countries that grow significantly harder or faster than us. So, but it's 50 years' time. I'm not going to be around. I promise you. That I assure you. I'm not going to be here when you finally say, "Sorry, you called it wrong."
I'm not going to put money on that one either, because I could see you in 50 years still trotting in here with a walker to sit down and tell us what you think.
But I think. I only did numbers over 5 years, and even over 5 years, There's some they're going to be good growth in Africa, but South Africa's still, I still see it lagging. I think there's a lot of work to do in this country.
We've only got a few minutes left.
Yeah.
I want to throw a few things at you. Investments. If you were 20 years old, what would you be investing in?
You've got to
now?
go equity investments.
If
No,
you-
it's not even a question. In fact, to be honest, Jeremy, I think we've got such good companies here. I don't even invest in fixed interest anymore. I'm like the old man with a piece of gold, and they used to do in the old days. So whenever they need to pay some money, they chip off a little bit of gold and go cash it in. So I'm saying I like an investment portfolio, and if I need money, I'll just sell off some of the some stocks, etc. In other words, I keep my fixed interest exposure very, very low. But that's me.
if you were in your 30s, what would you be investing in?
Same thing.
It's equities.
Yeah.
40s?
It's only when you get to your 70s and 80s, then you start to worry, and when you've got enough cash. But even so,
So all the way
interest
through.
rates are too low now to give you a real return. Again, a real return. If interest rates are now 5%, think about it. Interest rates are 5%, and I'm assuming you're going to pay tax. If you pay full tax on that, you're getting 3% return. Inflation, 4%. You've got zero.
Yeah.
So you've got to take a little bit of risk. And believe me, if you invest in good companies, it's a lot less risky than putting it in cash.
So you're saying equities all the way through.
That's me, but I mean, I'm I'm the right side of Genghis Khan.
What would you say is financially in South Africa, is our biggest threat for 2011?
Unemployment. I think it's the soft underbelly of this economy. I picked up a statistic yesterday, where it said that 50% of males under the age of 30 are unemployed. Where matriculants, only 1 out of 10 is going to get a job, then you know you've got a social problem coming. So I'm saying financially, this demand for us, I'm trying to translate it into what it means. It means that this taxpayers have to keep all these unemployed eating in Medicare and so on, and happy in school and so on. And that's too much of a strain for this economy.
Well, Clem Sunter was on the show at the end of last year, and he just said the government has got to start encouraging entrepreneurs, because those are the people who will start employing people. David Shapiro, thank you very much for your views on 2011.